Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books, and I've been covering Disney pretty closely. Bob Iger is in trouble, and he's definitely in a panic because he's attracted another activist investor who wants control of Disney. Bob Iger is going to lose control of Disney, and when the people have said, oh, even when Bob Chapek was CEO, Iger sort of still had control, a lot of people say that. But he's really living on borrowed time now because he's got this guy, Nelson Peltz, who's an activist investor who's looking to make changes at Disney. Now, Nelson Peltz, and first of all, what is an activist investor? I heard people ask that. It has nothing to do with promoting social justice. It's not what Disney is pushing. Let's put it that way. So an activist investor like Nelson Peltz is looking to take some money, in his case so far about $900 million, buy a big block of a public company stock, in this case Disney, and try to get the leadership team, try to get the board of directors to take different, better actions so that the company will make more money or make money for the activist investor himself. In this case, it looks like Nelson Peltz just legitimately wants Disney to get back to the great company that it used to be and to have it be profitable and a serious company again. Bob Iger, and it's funny because people have been telling me this and I've been saying, yeah, probably, maybe not, maybe so. Bob Iger, the only thing that he's been able to accomplish for Disney is it's consistently gotten more and more market power. So more and more IP, more and more market share, like acquiring Fox, and they've been able to use that market power to control the future of entertainment, introducing all this woke and this progressive stuff. That has never failed. The stock price has gone down, the profits have gone down, they eliminated their dividend. For 50 years, they were paying money to stockholders every year, just as a kind of a profit sharing. They stopped that. The only thing he's been able to do is get more and more power, more and more control, and cause entertainment to change, to go away from producing things that fans want and changing it into things that promote a specific ideology. It's really telling that Disney's #1 franchise now, its big success, is Avatar, something that has nothing to do with Disney except that they acquired it as part of a financial deal when they acquired Fox, and they really way overpaid at $71 billion. The concentration is not on great content anymore. It's this push that Bob Iger had for creating ideologically woke content. Why he's sworn onto this, God only knows, but it's definitely affected the company in a very negative way. So there are a few different articles I have on this. This one's from CNBC from today. Nelson Peltz lays out his case for a Disney proxy fight, slamming Fox acquisition. The proxy fight is to get a proxy vote of the shareholders to make a decision of whether or not Nelson Peltz himself, a billionaire, should be added to Disney's board, where if he was on Disney's board, he would go ahead and help them make business decisions to make more efficient operations. And so you know what he's trying to do? This website, restorethemagic.com, was set up by Nelson Peltz and his people, and they explain what their goal is, the problems that they identified with Disney, and what they want to fix at Disney's, very specifically. Trian, which is his investment company, believes that Disney is a company in crisis and faces many challenges that weigh on the company's investment prospects. We believe that these challenges are primarily self-inflicted and need to be addressed. This is what they say. Poor corporate governance, failed succession planning, over-the-top compensation, minimal shareholder engagement, bad planning to get a CEO. You can't argue that. Over-the-top compensation, meaning people are getting paid way too much for not having good results. And minimal shareholder engagement. In other words, big shareholders, people that own like $1 billion worth of stock, like Nelson and others do as well, can't seem to get access to management to talk about strategy and what their future plans are. Because the shareholders own the company. It's not the board and the management who own the company. It's the people who actually own the stock. And no, they can't have 1 million different meetings, literally. But there aren't 1 million people that own $1 billion worth of stock. They need to make time to meet with investors. Peltz also says that they have poor strategy and operations. A flawed direct-to-consumer strategy, that's the streaming. Lack of cost discipline, that means they seem to not even care what they're paying for things. And they use the theme parks to subsidize streaming losses. A lot of us have said that it is pretty obvious that the increased prices at the theme parks, which have resulted in really upset customers that feel trapped going to the theme parks, trapped spending extra money while they're in the theme parks, that was necessary to generate cash, and they've taken it way too far. For capital allocation, deteriorating returns on incremental investments, Questionable merger and acquisition judgment with Fox and Sky, increased leverage, limiting a 50-year plus dividend. So the capital allocation is just basically saying the way you're using money and investing and buying things, it may have been one thing that you got a deal buying Marvel for $4 billion, but spending $71 billion on Fox. And I understand why they did it at the time, but that's something that the board should have really thoroughly reflected on and had a good argument for. And another thing that Nelson Peltz points out, which is very wise, is look, whether you did it intentionally or not, you wildly overpaid for Fox. Nelson Peltz says they overpaid $50 billion. To me, I think the value of Hulu is at least $20 billion. So it's a little hard to say like, well, the rest of Fox was worth nothing. I mean, that doesn't seem really realistic. But let's say they overpaid $50 billion, whatever it is, they're going to have to account for that and write that down. In other words, they're going to have to take an expense and say, whoops, we spent an extra 40, 50, 30, whatever they want to claim it is. They spent something too much on Fox. That has to be reported. It's never been reported and accounted for. Now, here's Nelson Peltz's strategic and operating initiatives plan. Fix corporate governance. Develop an effective succession plan aligned with compensation with performance. So if you do really well as a CEO, get compensated. If you don't do really well, get a little bit of money, but don't get wildly well compensated. David Zaslav got something like $246 million when they did the merger with Warner Brothers and Discovery. But those are options, and those are predicated on the stock price like tripling, which it might actually do. That's what he's talking about. Fix strategy and operations. Improve the direct-to-consumer operating margins. So he's talking about streaming. Why are we not profitable in streaming when we're doing about as much revenue as Netflix? They're doing a lot of revenue in direct-to-consumer. Why isn't it profitable? Because the costs are too high. But the costs are too high, in my opinion, because they're paying themselves for the content and they're sheltering weird profits. We'll see how that comes together, because if Nelson Peltz gets inside this company, he's going to pull it apart. He's going to find everything they're doing wrong. Nelson Peltz doesn't think that they should sell off a lot of things either. They should refocus their creative engine to drive growth. The creativity does seem very weak at Disney, and this is the only mention that I've seen in Nelson Peltz's plan for Disney with reference to their creativity. He's not calling them woke or anything like that. He's staying completely away from that. Believe me, he's well aware. Fix capital allocation. Enhance accountability. Reinstate dividend by fiscal year 2025. So with respect to accountability, basically just saying like, listen, we have to be able to explain why we're doing certain things. And when we do something wrong, there has to be some follow through on that, whether we fire someone or we sell something else or restructure, whatever we do. And he wants that dividend back in 2025 because the company did have the dividend in place, which if you own the stock and you pay X dollars for the stock and you get like 5% of X every year, you know, a couple of percentage points in dividend, in profit sharing, well, that's good. You know, that makes the stock more valuable. It makes it more equivalent to other investments where you can get a little profit every year from them, like a bond, but you also have the appreciation value of if the stock goes up. And you need the dividend, especially when the stock's been going down, but they can't afford it now. So Peltz is saying, hey, let's figure out how we can afford it. Nelson Peltz's objective is to create sustainable long-term value at Disney by working with Bob Iger and the board. Trian, his investment company, recognizes that Disney is undergoing a lot of change quickly and is not trying to create additional instability. Trian is not looking to replace Bob Iger for ensuring successful CEO succession within 2 years. As promised, Peltz didn't like Iger coming back, but he's not looking to get rid of Iger right now, which makes sense because he would get no support for that. All of these proposals are based on the idea of getting shareholders interested in Peltz's future vision, not advocating for a breakup of Disney, for reinvigorating the Disney flywheel. So they're not looking to sell off pieces of Disney, which is also ridiculous because all their distribution is interrelated. They need Hulu, because Hulu sells Disney Plus, and they need ESPN Plus, because it's part of the bundle. They can't afford to sell that. They can't afford to sell Marvel. They can't afford to sell anything. Not Star Wars, not nothing. Reinvigorating the flywheel is when you have a hit movie and the IP is done properly, it should generate licensing. And it should also generate interest in your other titles. And also by having the hot license, all your other licenses get a lot more exposure to them. This is what he's talking about with reinvigorating the flywheel. Things have been so dull and uninspiring at Disney for years now that they've lost a lot of their mojo. And that's what the flywheel is about. Not advocating to increase financial leverage. Therefore, orderly deleveraging. They want to pay down the debt. Not seeking to cut costs that impact product quality or customer experience. For driving efficiencies and additional profits. But they do want to cut costs. And he damn well knows that their overhead is way too high. I don't know how many hires they have that they hired for diversity, inclusion, or other people that may or may not be performing or whatever's going on, they're going to get a big fight about that. Not advocating for aggressive price increases at the expense of customers, for ensuring customers can get real value across all business lines. This is the theme park part. If you don't have people that have a good feeling when they go to your theme park and they don't love the brands and love the experience, that is another example of the flywheel. It's very bad for the rest of the intellectual properties you based on the things you're exposing customers to at the theme park. It should always be a positive experience. It's fine for it to be expensive. It can't be insulting. Lastly, they're not advocating for a permanent dividend cut. They're for reinstating the dividend by 2025. And this means they need to make money. Cutting the dividend meant they could afford to pay more interest payments. They could afford more expensive overhead. They can afford to overpay for the production content when they're selling it to their streaming division. Just to get a perspective on how seriously bad the streaming division has been doing, it's lost $11 billion since it started. The management at Disney claimed that it would break even in 2024. Break even in 2024. That's assuming it even does. It doesn't, just because you say it's going to break even in 2024 doesn't mean it's going to. It will continue to lose money at least in 2023. But unless they make major changes, unless they fix the cost structure at the streaming service, it's going to continue to lose billions and billions and billions more. So this is the CNBC article. Nelson Peltz lays out his case for Disney proxy fight, slamming the Fox acquisition. And again, the proxy fight is basically just Nelson Peltz bringing up a vote. When you have a proxy vote with shareholders, it's basically people vote and whoever wins the vote gets the yes or no of whatever the question was. You could have had a proxy fight about adding Nelson Peltz to the board, or it could have been like, let's sell Marvel. Let's sell Star Wars. Anything like that. Disney is facing a proxy fight as Nelson Peltz's activist firm's Trian Fund Management pushes for a seat on its board. Peltz spoke Thursday on CNBC's Squawk on the Street, making his case for the fight his firm has picked with Disney. He raised issues with Disney's $71 billion acquisition of Fox in 2019 and how the company's shareholder value has eroded in recent years. Fox hurt this company. Fox took the dividend away. Fox turned what was once a pristine balance sheet into a mess. On Thursday, the activist firm filed a preliminary proxy statement looking to put Peltz on Disney's board. To preempt what could be a messy proxy battle and opposing Trian, Disney on Wednesday announced that Mark Parker, the executive chairman of Nike, would become the new chairman of the board. Disney's board would now have 11 members. The activist firm said it owns about 9.4 million shares valued at approximately $900 million, which it first accumulated a few months ago. Trian said Wednesday it believes Disney lost its way, resulting in a rapid deterioration in its financial performance. Peltz also said he wants to be on the board so he can get access to internal numbers and tell other members if they're missing out on opportunities. Now, what does Peltz know about opportunities? Why should they want him to have access to his numbers? This is a whole presentation. RestoreTheMagic.com. Very easy to get to. You can check it out. And it's, 30 plus 35 slides. Peltz has been around the block. He first got into business in a big way because of Michael Milken. Michael Milken financed him acquiring a company called American Can. And then he bought another company called National Can. And basically it was leveraged buyout stuff. But since then, he's been involved in multiple companies. Wendy, Vesco, PepsiCo, P&G, Pentair, Cisco, Cadbury, Heinz. It goes on and on. He's been successful in some of these proxy fights as well. They don't always like him coming in, but a lot of times they like him after he's been there. He's created some results for them. This is what this guy Nelson Peltz does. He is an activist investor and then he pushes for change at a company. But one of the things he specializes in is operations, changes to the operation. Other activist investors might pressure to sell off one of your divisions or make other company changes, take the company private, have the company take on a lot more debt so it could pay a big dividend. But the bottom line is Peltz apparently specializes in operations. And when he gets his hands on these inside numbers of what's actually going on at Disney, it will be absolutely explosive. But I will tell you this, Iger is not going to be able to hold on to control of this because it's not just Peltz and his $1 billion. He is well respected in industry. So there will be people that want to support him and follow his investment. If he gets the seat on the board, there will be rapid change at Disney. If he does not get the seat on the board, there will still be change. It'll just be slower. Quote, "I don't need to overwhelm them," Peltz said. "I don't need more than one person on the board." He wants to put himself on the board. Brian called out what he viewed as poor corporate governance on Disney's part, which we did cover. Peltz on Thursday said he only had a meeting with Disney's board that spanned about 45 minutes. So they gave him 45 minutes to talk, and he never heard a response from them about being able to join the board. Peltz also said Disney was open to making him a board observer, allowing him to sit in on meetings and give advice on operations, but without voting privileges. So basically Disney blew him off, and they've said, listen, we're not interested in you. Now, why would Disney blow him off? Because if Iger doesn't get rid of Peltz somehow, Iger will leave before the 2 years and Peltz will be on the board. Peltz is probably nice enough. He's probably a gentleman and won't expose everything that Iger is responsible for because it's not actually good for business. There will be change. And as far as there being a woke Disney, I don't know. I think you would see a Disney that would be, tell me what you think in the comments below, but you know that Universal does better than Disney with a lot of their films. Paramount has Maverick. Where is the Maverick? It's not Avatar. Where's the Maverick? Where's the classic hero movie coming out of Disney? Out of any of their brands, any of their imprints? There's no excuse for it. It's just not their creative. Dan Loeb, another activist investor who was pressuring Disney, he got another person on the board. He never brought up anything with the woke movies. Everyone is very well aware of it. Whether you're against it or you're for it, you know what it is. And is that costing business? It's costing a tremendous amount of business. It's not going to continue forever at this point. They got the attention of a billionaire who has gone in, messed with, and changed other multi-billion-dollar companies. Now he has Disney's number, and he's coming for Bob Iger. All right, let me know what you think of all this in the comments below. Do you think Bob Iger is finally in trouble because some billionaire is out to get him who has actually messed up in the past? Heinz, Dupont, P&G, he's caused change before. Disney stock is, half what it should be. Don't you think there's going to be change? Or maybe you don't think there's going to be change. Let me know what you think. Please be sure to subscribe to the channel. Click the bell for notifications. Give me a thumbs up. And I'll see you again with another video. And if I don't see you, I will miss you.